Hi, I'm Aishwarya Venkatesh. We all would have often heard the word Benami in movies in the context of black money. What does the word Benami literally mean? What does Benami transactions mean? What does Benami property mean? We will look into all these in this video. Benami transactions are governed by the legislation Benami Transactions Prohibition Amendment Act 2016. To understand what the Benami transaction is, let's consider an example. A Chennai property is purchased and registered in the name of Raji. However, the payment for the property is made by Vijay. Here, Raji is just holding the property in her name for the benefit of Vijay. Thus, Raji is a Benamidar, who is often in short called as Benami, and Vijay is a beneficial owner. That Chennai property is the Benami property. Benami property also includes the consideration that is received for such property and the documents evidencing title or interest in such property. Other transactions that fall under the category of Benami transactions are a property related transaction that is carried out under a fictitious name. That is, the Benamidar is fictitious, where the owner of the property, that is, the Benamidar, in our case Raji, has no knowledge or denies having any knowledge about the ownership of such property, where the person providing the consideration is untraceable or fictitious, that is, the identity of the beneficial owner is unknown. Also, there are certain transactions which will not be treated as Benami transactions. They are property held by a member of HUF for the benefit of HUF. Similarly, property held by a trustee for the trust. Property held by a director for the company. Property held by a depository participant for a trader. What does this mean? A depository participant for a trader. Very simple. Nothing but holding of shares of a trader in demat form. That is, in electronic form. Property held by spouse or child. Property held jointly with brother, sister, lineal ascendant or lineal descendant. These transactions won't be considered as Benami transactions only when the sources from which the consideration is paid is known to such individuals. Now, let's consider the reasons. Why would someone enter into a Benami transaction? The possible reasons might be: first, limit on agricultural land. Every state has a certain limit on the amount of agricultural land that an individual or his family can hold. Thus, people purchase an agricultural land in another person's name but pay the consideration for it. Second, insider trading. People who have access to the price sensitive information of a company due to their position in the company are not allowed to trade in the shares of the company, as it would amount to insider trading. So, they will appoint a third party who will trade the shares of the company on their behalf. Thirdly, demonetization. We all know that Modi government announced demonetization on 8th November 2016. From the period 9th November 2016 till 30th December 2016, the banks and post office branches were supposed to inform the tax department when an individual deposits cash of rupees 2.5 lakhs or more. For current accounts, which are usually maintained by businesses, the threshold limit was rupees 12.5 lakhs. Thus, depositing cash below the threshold limit would make it easier to bypass the tax provisions and to escape from disclosing the sources of income to tax department. So, there were many instances of persons depositing old notes below the threshold limit in various third-party accounts to exchange them for new notes. As the definition of property in the Benami Transactions Act includes cash, these transactions which happen during the demonetization would also be termed as Benami transactions. Fourth, evasion of tax. Clause number 18 of the tax audit report requires the taxpayers to disclose the details about tangible fixed assets owned. Also, the taxpayers who are earning more than 50 lakhs are required to disclose the assets that are owned by them in the income tax returns. Such disclosure of assets would reveal the source of income used to purchase that asset, which might end up in disclosing the black money or any interventions in corruption. It is also easy to cover it up in accounts by not disclosing the income source and the expense that is made from it, that is, the expense that is made to purchase that asset. Finally, what is the punishment for Benami transactions? The various forms of punishment under Benami Act are confiscation of Benami property, imprisonment, and fine. I hope this video would have given you some insight on Benami transactions. Thank you.